as we give this mock a go, I'm doing this a little bit blind, so hopefully we'll get it right. There won't be too many pauses and delays. So just looking at the first working, that's your normal stock working, so we'll give that a go. So we've got stock of 91.2, and from that there's damaged stock with which costs 5.6 and now has a value of 2,000. So we're going to take away the 5.6 and add on the 2,000. As usual, we won't total any of these because there might be changes coming along. Sorry. Second one then is your patents working. So patents incorporating 4 months investment income are to be written off over a 5-year period commencing in 2008. So usual, we'll go with our investment income. We'll have investment income due, patents, and patents written off. So we'll go up and we'll look at our investments, and we see that we have 3% investments bought on the 1st of the 6th, 2018. So it's going to be 3% of 150,000. And because you bought them on the 1st of the 6th, that's the 1st of June, you have them for 7 months. So we're going to multiply that by 7/12. That gives you your investment income for the year. So that's 2625. That becomes your starting point for your investment income due. So investments, if you remember, incorporated 4 months investment income. So it's going to be 2625 by 4/7. You don't have them for a full year. You only have you only have them for 7 months a year. So it's by 4/7. And that'll give us the start of our investment income due. So 2625 by 4/7. So that's 1,500 to be taken away. Now I'll come back to that later. There might be other changes in this as we go. So patents are next then. So patents start off in the question as 30,500. We're going to add on this 1,500. So the investment income of 1,500, which brings you up to 32,000. And then patents are written off over 5 years. So we're going to divide that by 5, and that'll give you your patents written off. That's 6,400, which will take away from this 32,000. Okay, and that's your second working done. Now the third one is the suspense working. Hopefully, having done suspense accounts over the last couple of weeks, this might be a little bit easier for you. But the suspense figure arises as a result of the incorrect figure for the debenture interest and a VAT payment of 2,500 entered on the incorrect side of the VAT account. Both transactions were entered correctly in the bank account. So what's happened? Was an incorrect figure for the debenture interest. So the first thing we're going to go and see where that is. So we're looking for debenture interest paid in the question, which has to be here. Debenture interest for the first 3 months is 3,600. Now it's telling us that number is incorrect, so we need to find out what that number is. Okay, and we're going to adjust it. So that's 3,600. We know that that's wrong for 3 months. So 6% debentures, including 80,000 issued on the 31st of the 3rd. So you didn't have this 80,000 at the start. So it's really 6% of 280,000 minus 80,000. And it's for 3 months, so it'll be by 3/12. So that's 3,000. So it should have been 3,000. They have it as 3,600. So they're wrong by 600. Okay, so where we have to change whatever incorporates suspense. So in this case, it's where is it? Salaries and general expenses. So salaries and general expenses start off as 245,700, but this 3,600 is being reduced by 600. So to make this still balance, we have to add 600 onto the salaries and general expenses. So if you think about it, this 3,557,600 has gone down to 3,557. You've taken away the 600. We have to get it back up to 3,557,600. So we're going to add on 600. That's the first part dealt with. Now I would be changing this, changing that to 3,000 on my question sheet as well, because we're going to use that 3,000 later on. Now the second part, these would have been new for you. There's a VAT payment of 2,500 entered on the incorrect side of the VAT account. Now, payments come out of the bank, so there'd be credit bank and debit VAT. So what this is telling us is they have credited bank and credited VAT. So they've put 2,500 on the wrong side of the VAT account. So VAT starts off, as you can see, as 15,000. Now that includes a credit of 2,500. So to get it back to zero, if you think about what we did with suspense accounts, we'll put 2,500. That's to undo what they've done. So it'll be minus 2,500. And then there'll be another minus 2,500 to do what they should have done. So they've credited 2,500 here. So debit 2,500 to get it to zero, and then another debit of 2,500 to do what they should have done. So VAT really should be 10,000. Okay, so that's that done. If you think about it, what's happened then? VAT has gone down by 5,000, so this goes down to 352,600. So this debit side also has to go down to 352,600. So we're going to take away another 5,000 from our salaries and general expenses. So hopefully that should be a little bit easier, having done the suspense account stuff over the last couple of weeks. So we move on then, and we look at our next working, which is a debtor who owed Hill 24,000 sent a cheque of 23,500 in full settlement of the debt. So we can say immediately on that one that there is a discount. So we know there's going to have to be some level of a discount involved, and we can try and work out what to do with the rest of it as we go. But again, this shouldn't be too tricky for you at all. So we'll start off with the debtor. He owed 24,000. He sends us 23,500 in full settlement. So the debt goes down by 24,000. So debtors are going to go down by 24,000. Doesn't matter that he only sent us 23,500. So debtors are 102,600. And we're going to take away 24,000. The next thing then, he sent us a cheque for 23,500. So our bank overdraft is going to go down by 23,500. Assuming it is a bank overdraft, it is. So 35,000. It's going to go down by 23,500 because that's the amount the cheque has been sent for. So that has to affect the bank. And then our discount is going to go up. Depends on whether discount is a debit or a credit. Discount at the moment is income. Discount net is income. So our discount has to go down. So by €500. Has to be a debit of €500 there. Okay, so we've credited debtors by 24,000, so we have to debit bank overdraft and discount by 24,000. So we're debiting the 23.5 and then debiting the 500. Okay, so that's that working done. So we move on. The fire working. So during the year, a storeroom which cost 20,000 and stock which cost 12,000 were destroyed by fire. So I'm going to deal with this sort of in three parts. So we'll deal with that part first. The storeroom was destroyed by fire, so buildings has to go down by 20,000. So buildings started off as 1250. Always the cost figure, remember? So 1250. And we're going to take that down by 25,000. Sorry, it's 20,000, is it? By 20,000, yeah. I just want you to be aware that this will then automatically go down by 20,000 as well. So if you take it that buildings is 1250 and the value is 11, there's 150,000 depreciation. That's not actually changing. So this goes down by 20,000. The 150 doesn't change. So this here also goes down by 20,000. So just be aware of that you might make a note on your question somewhere that accumulated depreciation is 150,000. In fact, I'll do it here. So it's not changing, but it's the difference between 125 and 11 is 150,000. Just be aware of that. Next job then. Stock which cost 12,000 was destroyed by fire. You don't change stock, you change purchases. Stock has already been changed, it's been destroyed, so you can't count it. So goods that you bought were destroyed by fire. So 1460, and we're going to take away the we're going to take away this 12,000. Okay, so really what should have happened then, you should get a compensation of 32,000. I'm going to skip all this stuff in the middle. This damage 20 and 12 is 32. You got compensation of 30,000. So they haven't paid it yet, so that's compensation due. And that's going to be 30,000. The 30,000 does not match up to the 32,000. So there has to be a loss of 2,000 euros. So if the compensation doesn't match the damage, there's a loss. It can never be a profit because you're not allowed profit from an insurance claim, but there can be a loss. Most of the questions, the compensation equals the cost of the damage, so there is no profit, there is no loss. It's just zero. But in this case, the compensation didn't equal the amount of the fire. So that's that one done. The next thing, a new store was built by the firm's own workers. The cost of their labour had been treated as a business expense. That's basically telling you that it shouldn't be. So salaries and general expenses, which we changed already, need to come down by the cost of the labour, which is 28,000. And then the stock of 62,000, that has to come out of purchases. Both of those go into buildings. So you add on the 28,000 and the 60,000. You move them from labour and purchases and put them into buildings to create your asset. And that's that one done. Okay, so you've dealt with the loss already on the fire. So again, what we do, we take out the damage, the storeroom that's been destroyed out of buildings. We take the stock that's been destroyed out of purchases, and then we compare it to the 30,000, which is a current asset. If it's less, which it was in this case, there's a loss. So the loss was 2,000. Then you take the labour, take that out of salaries and general expenses. Take the materials used, 62,000 out of purchases, and add both of those into your buildings. That's that working done. All right, working 6 is your depreciation working. So, provide for depreciation on delivery vans the rate of 15% of cost from the date of purchase to the date of sale. So we've got delivery vans first. So delivery vans starts off at cost of 310,000. Now it tells us that on the 31st of the 5th, the delivery van which cost 44 was traded in against a new van costing 58. So we're going to take away the 44 and add on the 58. And that's 324,000. Now, depreciation is 15% from the date of purchase to the date of sale. So we'll have depreciation of delivery vans, and it's going to need 2 lines. So it's going to be 15% of 310,000 for the months involved there, and 15% of 324 for the months involved. So what date did it happen on? It happened on the 31st of the 5th. So for the first 5 months of the year, you had 310,000. For the remainder of the year, you had 324,000. So in total, you have depreciation of 47,725. So next then, when you've got depreciation, you'll automatically have accumulated depreciation. So the accumulated depreciation starts off, it'll be given in the question. The difference between 310 and 220 is 90,000. We're going to add on the 47,725, and we're going to take away the depreciation on the old van. So the depreciation on the old van is 15% of 44,000 for the amount of months you had it for. So you bought the old van on the 31st of the 8th, 2015. So that's 9, 10, 11, 12, 4 months in 2015, all of 16 and all of 17, and 5 months in 2018. So that's 24 plus 4 is 28, plus another 5 is 33 twelfths. Let me just make sure that 9, 10, 11, 12 and 15, that's 4 months. All of 2016 is another 12. All of 2017 is another 12. So 24 plus 4 is 28. And then 5 months is 33. So that is 15% of 44,000 by 33 twelfths. 18,150 to take away. So your starting point of 90,000, add on your 47,725, your charge for this year, and then take away the 18,150. 47,725 minus 18,150 is 119,575. Now, anytime you sell an asset, you have a profit or loss on the sale of that asset. So how we find that? We compare the allowance that we received. So the allowance that we received is 20,000, and we compare that to the value of the van that we sold. So the value of the van we sold is 44 minus 18,150. So the van you sold was worth 25,850. So you got an allowance of 20,000 for a van that was worth 25,850. Means you made a loss of 5,850 on the sale of that van. And the final part of that working is the check for the net amount is included in purchases, and it shouldn't be. So you have to take it out of purchases. The check for the net amount is the new van, 58,000, minus the allowance of 20,000. So you wrote a check for the difference, which is 38,000. So that gets taken out of purchases. And that's that working done. Let's see why you didn't get this question finished. There's quite a lot in it. So next one, the figure for advertising is for a 24-month campaign which began on the 1st of the 6th, 2018. So this year, 1st of the 6th, 2018 is 7 months, which means there's 17 months prepaid. So we have to split up advertising into 7 months for this year and 17 months going forward. So if we look at advertising, it starts off at 48,000. It's good of Beverly who wants to meet me there. So you've got 48,000 for advertising, and we need to find 7 months this year. So it's by 7/24. So 14,000 of it is for this year. The remainder is advertising prepaid, which is 34,000. Okay. So the total is 48,000. And that's that one done. All you're doing really is splitting up the number. So make sure to cross that one off, the 48,000, when you're done. So, working 8, a creditor who was owed 12,800 accepted equipment with the book value of which was 11,600. Now, before you go any further, it doesn't matter how much the equipment was worth. The debt is going down by 12,800. Alright, so creditors is 87.5, and it goes down by 12,800. Now, they've accepted office equipment with a book value of 11,600 and full settlement of the debt. So we have received a discount of the difference. So 1,200 of a discount. So we have received a discount. So that we're going to discount is a credit, which is an income. So we're going to add on another 1,200 to that discount. The difference between the 12,800 and 11,600 is a discount that we've received. So that's going to be added on to the discount. In full settlement of the debt. Now that's the discount part. The office equipment, it costs 16,000. So no entry is made in respect of this transaction. So office equipment needs to go down by the cost price, which is 16,000. So office equipment costs 45,000, and we're going to take away 16,000. And that gets you down to 29,000. Okay, then it tells us so I'm just trying to work out if it's a profit on the sale of equipment or well, I'll have to check the market scheme at the end. 1200, it's either a discount or a profit on the sale of equipment. It's probably a profit on the sale of the equipment actually rather than a discount. It won't actually make any difference to your final answer, but it would make a difference to the marking scheme. Anyway, no entry is made in respect of the transaction, and it tells you provide for depreciation on office equipment held at the rate of 20% of costs. So we're going to do depreciation of equipment, and it's 20% of cost, so it's 20% of 29,000, which is 5,800. That has to get added to your accumulated depreciation. So your accumulated depreciation of office equipment is 45 minus 35, which is 10,000. You're going to add on that 5,800, but then you have to also get rid of the depreciation that was on the equipment to date. So the depreciation on the equipment to date, if it had a value of 11,600 and it cost 16,000, it had to have been depreciated by 4,400, the difference between the two of those. So you don't have that accumulated depreciation anymore. So then it's just to see whether we're going to count the profit as a profit on the sale of equipment, or we're going to count it as a discount. I'm not really sure. I said I'll check what the marking scheme did at the end. That's obviously a tricky enough question. The next one then, no record to be made in the goods in the books for goods in transit. The invoice for had been received showing for 18,450, including VAT at 23%. Again, another tricky enough one. So VAT shouldn't be included in the purchase price, so we have to work out the cost price excluding VAT. So to find that, we're going to take that 18,450, we're going to divide by 123 and multiply by 100, which is 15,000. Now that 15,000 is in transit. We own the goods, so it gets added to stock, purchases and creditors. Sorry, so the stock is another 15,000 added on there. We're going to add it to purchases. And we're going to add it to creditors. Now in reality we're adding the full amount. I'll just put in the 15,000 for the time being, but in reality for creditors we owe them 18,450. I'll just show you where the remaining 3,450 goes. Okay, so 3,450, the VAT amount is debited to VAT. So it's I think I've changed VAT already, but the 3,450 is debited to VAT. Sorry, and I think VAT was a credit starting off with. I should note that it was. So it's debited to VAT 3,450. So therefore it's credited to creditors. So in reality you owe 18,450 to the creditors, the full amount. I might go through that in class with you again, but you remember you always have to show VAT separately. And when you buy goods, you get to claim the VAT back in them. So when you buy goods, VAT is owed back to us. So we pay the full amount, the 18,450, but we get to claim the VAT back. So that reduces their liability. So that's why our VAT goes down by a further 3,450. Okay. again, you actually have seen that before. You've seen it in tabular statements, but it's just something to be aware of. The stock doesn't include the VAT. The purchases doesn't include the VAT. You have to show the 15,000 and the 3450 separately. So in effect, what you're doing, if I could show you in T accounts, I'll show you in T accounts. So let's just say we've got how do I merge these? So we've got our purchases account, we've got our VAT account, and we've got our creditors account. Well, what's happened? You've bought goods that cost 15,000, so it's debit purchases, and the VAT was 3450, so it's debit VAT, and it's creditors 18,450. So that's a double entry. So 18,450 on the debit, 18,450 on the credit, which is what we've done. So we've added 15,000 to purchases. We've taken 3450 away from VAT because if VAT is a credit balance, so when we debit a credit, we take it away, and we're adding 18,450 onto creditors. So you probably understand that, but I may have overdone that slightly. That's that one done. So provision to be made for investment interest and debenture interest due. We've done the investment interest already and the investment interest due, so we have to do the debenture interest. So let's look at our question. We know that we have debentures and a change, so there's 6% of 280 minus 80 for the first 3 months, so 200,000 for the first 3 months of the year, which we know is 3,000 because I worked it out earlier on, and then 6% of the full amount, 280, for the remaining 9 months of the year. What the hell? So in total, that's 15,600. And then the debenture interest due is the 15,600 minus what we paid, which was the 3,000. So we know that because remember we changed this here, the 3,000, and it'll be the 12,600. It's nearly always that's what you've paid, so that's what you've due. But that full 15,600 is your trading profit and loss account element of it. So finally then, provision for bad debts to be adjusted to 5% of debtors. So BDP, 5% of debtors. So it's the new debtors figure. So we've changed debtors to be 102,600 minus 24,000. So 786. Which is 3930. So anytime we change bad debt provision, there's going to be an increase or decrease. So we have to compare it to last year's. So last year's bad debt provision was 5.2, so it's a decrease in bad debt provision. So it's gone from 5.2 to 3930. Which is 1270. So decrease in bad debt provision is another operating income. So please be aware of that. That's that one done. Buildings to be depreciated 2% of cost. So it's going to be 2% of our new buildings figure. So our new buildings figure is where is it? It's up here somewhere. So it's this one here. So I have to work it out. 1250 minus 20 plus 88. So it's 131800. Let me just check that. Buildings 131800. So that's 26,360. Now, our accumulated depreciation on buildings will be, remember we said we adjusted it. It starts off at 150,000. So it's the difference, initial difference between these two figures. It doesn't matter that there's been a change, it's still 150. And we add on the 26,360. So there might be one more working, is there? Alright, Jesus. The managing director should be paid a bonus commission of 2% of 2.5% on all sales in excess of 1250 and a further 4% in excess of 15. Now, just be careful when you're reading that. It's 2.5% of between 1.25 million and 1.5, and then 4% above that. So the commission is 2% of 250,000. That's the difference between 1250 and 15, assuming sales is greater than 15. We hadn't adjusted sales, I don't think. So sales, and sales is 880, so it's going to be 4% of the difference between 15 and 1.5 million, 1.88 million. So that's 380,000. So that's 5,000 and 380,000. So that's 20,200 commission that he has to get paid. Now, I'm not sure. You'd have to check and see if there is commission. It may, in the marketing scheme, include that in salaries and general expenses. I would just put it in as an expense commission, and then it's also commission due. He hasn't been paid it, so it's also a liability. We owe that money for 20,200. Okay, so that's our workings done. We have to complete the whole thing now. If you just bear with me, I'm going to have just a quick look at the marketing scheme for. I just want to see if they put it in as a profit or a loss on the sale of the thing, or did they put it into discount. It could be done either way. I'm not sure. Bear with me now. Not that it actually really matters too much, but for my own sanity. So now, just while I'm looking at this, they actually, for that sales commission, they've done it different than what I would have read that as. That he's paid a bonus of 2.5% of sales in excess of 1.25 million. They're saying it's all sales in excess of 1.25 million. Now, this has been asked in the Leaving Cert question before, and it was only on the difference, but we'll go with what they're saying. So they're saying it's 2% of 1880 minus 1250, which would be 630. Now, I'm not sure how you read it, but we'll go with what they've done. So that's 15,750, and then it would be 15,200. So do those together. Sorry, 15,750. So it's 39.50, which would be a current liability as well. That's not really what I was looking for, but let me see. Where would it have been? It was equipment, wasn't it? Yeah, no, they have put it in as a discount from the creditor, so I would be happy enough to go with the way I've done it there. So just I'll total up these numbers and we'll get working on the last part, which is just putting the figures in. So you can probably skip forward a minute or so here. Nothing's going to happen. Okay, that seems to be everything in. So we can start throwing all the numbers into our answer. So you can either start at the top, put all the numbers in from sales and work your way down, or you can put all the numbers in and then total at the end, or you can do a mixture of both. It doesn't matter. So what I'll do is I'm going to put in. I'm going to, for the sake of this one, I'll start at the top of the question maybe, and we'll work our way down. It doesn't matter. So sales. So yeah, we know sales hasn't changed. So sales is 1880. That didn't change in the workings. Just make this a little bit bigger maybe for you. The opening stock comes from the question. So the opening stock is 83.2. Then we've got our purchases. Now our purchases came from our workings, so we can put that in. One of our first workings, I suppose. So 1363. And then we're going to take away our closing stock. That would have been our first working. 102,600. So it's opening stock plus purchases minus closing stock. And we could take our answer away from our sales, and that will give you our gross profit. So we're looking at our expenses. So our administration are our office-based ones, and our selling and distribution are our sales-based ones. So You can look and see if we've got any from the main part of the question. Not really in admin, so they must all be on our workings page. So we've got from the top salaries and general expenses 213,300. So get that in. We probably have salaries. Next one we'll have is advertising. Now advertising is salary is selling. What am I saying? Next one we'll have is patents written off 6,400. Then we've got the loss, don't we, on the insurance stock. So loss due to fire of 2,000. Or loss on insurance claim, maybe what you call it. And then we've got our depreciations of buildings and equipment, neither to do with selling. Alright, so depreciation of buildings is one of our last ones. So depreciation of buildings is 26,360. And we've got depreciation of equipment, which was another one of our last ones, 5,800. So we've just add all them together. We've 253,860. So then we've our selling. So we've got our commission. So that's our last one. So that was fresh in my head there. So the commission is 39.50. We've got our advertising of 14,000. We have our 2 delivery van ones. So we've got our depreciation of delivery vans 47,725. And we've got our loss on the sale of delivery vans, which was 5,850. Don't think we've any more. If we do, it won't balance. We'll find out in a bit. Obviously, you can be just ticking these off from your workings page as we go. So we add up our 2 expenses. We're going to take them away. For fuck's sake, sorry. So that's 104,015. Where have I gone wrong here? Sorry, that sales is 1880. Okay, our other operating income then. So I know there's a couple of things we have. We've a decrease in bad debt provision. That was one of our last ones. 1270. and we certainly got our discount. So the discount is God, where was the discount? Discount 13,400. So we're going to add those together. And that'll give us an operating profit of 198,685. So to that, we'll add our investment income. The investment income was 2625, I think. Where are you? Investment income 2625, yeah. And we're going to take away, obviously we'll add that on. We'll take away from that our debenture interest, which again was one of our later workings, 15.6. And we get 185710. Alright, from that we have to take away our dividends. Now, they don't give us a huge amount of information on dividends. There was no working to do. It's 28,000. You could, if you want, try and work out how much was preference and how much was ordinary. You don't actually have to if they don't give you that working to do. So take that away, and then your profit and loss balance, we're going to either add that on or take it away depending on whether it's a credit or debit balance. So the profit and loss balance was a debit of 51,000. So we're going to take that away. You get 106,710 as your final figure. So that's our trading profit and loss account done. Hopefully it's right. I'll check at the end. So we go up to our balance sheet. So we got our patents, which were 25.6 after we've written them off. We've got our land and buildings, which I go and check what the buildings were. Depreciation buildings, where are you? So buildings were 1318000. The accumulated depreciation of the buildings was down here somewhere. 26,360. So 176,360. Your motor vehicles were 324. The accumulated depreciation, which I should bloody just check before I do it, is 119575. And then I'm going to have to put in an extra line here for equipment. It's normally not 2, but there is in this case. So we've got equipment. Equipment started off as 29,000. And there was accumulated depreciation on the equipment then as well of 11,400. Now, just to get full marks, you need to total the tangible fixed assets, and then add on your investments. So they were 150,000, and then your total fixed assets are your patents plus your tangible plus your investments. So 1539265. Your current assets, then your usual ones. So you'll have your stock. Your stock is that's your closing stock. Open check. We'll check over here. It's easiest. 102,600. You'll have your debtors minus your bad debt provision. So bad debt provision 3930. The debtors is 786. So it'll be 78,600 minus bad debt provision of 3930. That'll give you debtors of 74,670. The other ones you'll definitely have, you've got your advertising prepaid 34,000. That's an asset. And you'll have your compensation due. I think that was 30,000. You could of course be putting those ones in as you go along. There's no real reason to wait to the end. And you always have your investment interest due, which was up the top. It was 1125. So we'll add those together. 242395. Your creditors. Well, you'll have your creditors. Your creditors were changed in the question to 20 something, was it? Creditors 93,150. You have your, just from here, you've got your PAYE. So PAYE, because it's a credit balance, is a liability. It could potentially be a debit balance, but highly unlikely. Then you've got the ones I remember. Sales commission due. That's the same as your sales commission. So sales commission was 39.50, and there's a due of 39.50 as well. You've got your VAT. So remember we changed our VAT. So 6550. You've got your bank overdrafts, which I'm fairly sure we changed as well. 11.5. What am I missing? PAY 1. It's creditors. PAYE. Oh yeah, debenture interest due. So your debenture interest due is down at the bottom. 12.6. So we take those away to get your working capital, and then add on your answer. 1501210. Right, into your liabilities then, your debentures. So debentures should come from the question. So 280. Your capital and reserve. So you have to put in your authorised share capital. So you've got 1.3 million authorised, and you've issued of, or preference of 600. That's split up. That's paid 800 and 400. So that'll be authorised and issued share capital. Should total them. Again, there's no massive benefit out of totaling them, but you do get marks for that. You lose marks if you don't do it. Add on your profit and loss balance. So that's your last number there, 106710. There was no revaluation reserve, so add that on to your debentures, and you won't be surprised to know it doesn't balance. Where am I going wrong? That's at 800,000. So it doesn't balance because that's a 280,000, and it still doesn't balance. All right, so we'll try and work out why that is. How do you know why that is? Bloody hell. So you go through all of this, make sure you have everything. So buildings in, delivery vans, office equipment, patents, investments, all of those in. You get to this capital reserve, 20,000. So capital reserve, it goes in your reserves. So we're getting closer as to why it doesn't balance. I have an extra zero in there, of course. Good man. Extra zero on the two of these. And I have an extra zero there. God, I'm making some pulses. 16066710. And sorry, I'm just gonna have to check the marking scheme here. Okay, they have a positive working capital. So what have I left out? Probably a zero somewhere. 39.50 for sales commission. Debenture interest due 12.6. Bank overdraft 11.5. So there you go. So that's right. Buildings. 1318. They have a different number. So I've mistaken the land in the buildings workings. I will find that mistake and get back to you. Let me just check. 1318. Let me just see. Materials is 62,000. Bloody hell. So she 1320. Alright, so that's going to make a couple of mistakes. So that should be 1320. That's going to cause that to be different. The accumulated depreciation. The depreciation on buildings will be 2% of that. My depreciation of buildings, 2% of. You can ignore all this if you want to come back at the end because it'll take me about 2 minutes to change this. 1320. That's 26.4, which means the accumulated depreciation will be 76,400. So just a couple of numbers to change. Bloody hell. Sorry, there's a stupid mistake. So the depreciation on buildings is wrong over here. Depreciation on buildings. So that was 26.4. So 106,670. 106,670. There you go, balances. That's it done. Just a stupid mistake there for me transcribing numbers, but apart from that, it should be alright. So hopefully that was of some use to you. The working should be useful. The problem with doing it the way I did at the end, starting from sales to the bottom, is you're trying to work out to make sure you've got everything in. I personally think it's probably better to take all the numbers from the workings and transcribe it that way, then take all the remaining numbers and put them in, and then add and subtract at the end. But anyway, I will put that up, and I'll do the cash flow statement later on during the week. There you go, lads. Thank you.